Hello, today is October 5th, 2019. Let's go over our call. We didn't have a directional call because of the employment report. Futures were down sharply most of the night, and then when the report came up, they were up sharply. This is what my friend, the late Bill Blount, used to call a pea and trap, meaning the Europeans who were short had to cover. They were down most of the night, gap up smartly. The usual expectation is an all-day rally as they rush to cover. Same thing works in reverse. If you're up most of the night and then you gap down smartly, look for an all-day drop. Pattern we called for was the one with the early high. It tends to rally and close near the high. We got that. Someone else's work says if we went past Thursday's close by 1 cent, that this was a major change in trend. For a day at least, it looks like he knew what he was talking about. If this is a major change in trend, you'd be happier if our October 3rd, 2865.40 MEJT target didn't print by its preferred time frame of early Monday. In fact, you'd be happier if this didn't print at all, but that doesn't hold true for the new target generated by today's patterns of 2935.39. It's also an ultimate target. Unless we gap up smartly, that's my call for Monday. If we do gap up, I'm not predicting that this prints one way or the other. We had an ultimate buy signal here. The buy signal just gives a target, doesn't give an entry. After the buy signal, you had a pretty sizable drop if you were long, but eventually it paid off when we got higher prices. We had ultimate buy and sell signals in the afternoon. Here's the buy. The sell signal hasn't been satisfied and the ultimate hasn't been satisfied. The target's the same, and usually the ultimate gives you more than this. Usually when you get ultimate buy and sell signals in the same pattern, you don't get big sustainable moves. Usually it retraces. Usually and always aren't the same thing. Particularly with this pattern where if you have an all-day rally on Friday, starting at the low bar, ending with the high bar, almost always it'll carry through into Monday. If we don't follow through Monday, it's a negative pattern for the short term at least. Let's just point out how well these support levels worked. Here's your time to mark TDST line, and the bars under the band. We said we would trade over the band, and we did. Well, here's what we said before Thursday night. Friday we called for the early high, typically a rally day with a high near the close, major reversal signal in someone else's work. We said unless we gap down smartly, higher prices should print. I thought there was a chance of that happening, and until the employment report there was, but that's why I don't call things before the employment report. Well, here's a pattern. Here's a chart we've shown a number of times with this long-term trend line. Look where this week's low ended. Put on the line. Is that a thing of beauty or what? So maybe this guy who called a major change in trend knows what he's talking about, as I said. Well, here was our wave count. We're looking for wave blue C to end. We hit a target in the 2840s. We got the 2850s, around 12 points from our target. Maybe that's close enough. Let's focus in on this wave, which is wave blue C of brown 2. Well, we had, this is wave black A, and I had wave black B ending here, and then when we got a higher price, I forgot to adjust my wave B. So with this, I had a target nicely in the 2840s, and if I'd adjusted it and not made the mistake, you would see wave C equals twice wave A right at the low. So I think that's the call for having completed 5 waves down. Now the question is that the end of wave blue C of brown 2? Or is that just A of blue C of brown 2? A lot depends on how this wave counts. If we're in wave brown 3, should be a strong rally and should count as a 5-wave structure. Now for now at least, it counts as a 3-wave structure with C equal to A right at the high. And this could still morph into something else, but if it's a 3-wave structure, we're still in wave blue C. And there should be one more wave down because we've completed the A and the B. So what do we say for Monday? Monday's pattern has the early low. We could gap up first. There are lower MEJT targets. Unless we gap up smartly, I think we'll see lower prices. It says nothing about how we close. We've had a strong rally off an oversold condition, but it lacks breadth. Now, when I saw this at first, this is the breadth indicator I use, bullish percent index on the SPX. I thought it was just a misprint. I mean, it didn't change at all, but it's not a misprint based on some other charts. There was no improvement in breadth on the rally, and for now at least, the rally counts as a 3-wave structure. And until I'm proven wrong, that's why I don't think it's wave brown 3 yet. Counts as a 3-wave structure. For now, I'm not convinced the lower the decline's in, but we do have Bollinger Band reversal signals on the volatility indices, so there could be more upside nonetheless. Rallies like Friday's with an early low bar and last bar at the high a day and strong rally almost always followed through at Monday's open. If you gap down instead, which I'm not predicting one way or the other, it's very negative. So where do we stand? According to someone else's work, this week's low marks a major change in trend. The low could still be challenged and even undercut by a bit. Monday, if we gap up smartly, the odds are lower that the low's in greatly increase, but I've got no call specifically for the day. If we don't gap up, I think we're going to see 29.35, 39. If we don't add to Friday's high at all, it's negative for the short term and lower prices should print. If we gap down smartly, it's very negative and a new down leg should be starting. If that happens, I think this week's low will be challenged, but not to be undercut by a large amount if at all. I think here the market's forming a bottom. There could well be one more down leg, ideally accompanied by an improvement in breadth. And if that happens, I think we'll have a long, strong rally probably going into next year. So we're going to see how we open. This is a potential high here if the normal pattern of following through doesn't happen. Here's my target. Gapping down smartly, which I'm not predicting, means we're starting the last leg down of the corrective wave brown 2. And once it's over, which shouldn't take that long, I would say before the end of the month, we start a long, strong rally into next year. Let's see how we open, and that's today's call.